Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, we have Scott Nations. He is the president of Nations Indexes. We're going to learn about PutWrite Indexes and how they can work in any type of market. Scott, it's great to have you with us, as always. And before we even get into the index itself, what is a PutWrite strategy?
That's a great question, and it's a strategy that all sorts of investors should be using. So let's say that we have a chunk of money. We could buy an underlying index like the Nasdaq 100. We could use all that money to buy all the stocks, or we could do something slightly different. We could segregate that money. We could sell a put option on the index, and in selling a put option, we collect some premium, and we agree to buy the index if it falls further. It's a great way to really get the math working for you. A PutWrite will track the underlying index. It will generate some premium, and that means that the risk-adjusted returns over time are going to be better than the underlying index.
All right, now what about the Nations PutWrite Index? Tell us about that.
The Nations NDX PutWrite Index focuses on the NDX, the Nasdaq 100. So each month we sell essentially an at-the-money 30-day put option on the NDX, the Nasdaq 100. We collect that premium. We wait the 30 days. We wait for the option to expire. And then we sell a new 30-day option. And in that way, we always have constant exposure, but we take advantage of the fact that we're always going to sell those options for a little bit more than they're worth, or at least over time we are. We get a lot of exposure to the NDX. It tracks the NDX very closely, but once again, the risk-adjusted returns over time are substantially better than the index alone.
And that was my next question. Has it outperformed?
Absolutely. Over time, the risk-adjusted returns are better than the underlying index. The Sharpe ratio, which is risk-adjusted return, is quite a bit better over time. And the important thing is that the risk-adjusted return of the PutWrite index has outperformed the underlying index over every single time frame we measure. Every time frame we measure, the risk-adjusted returns are better. So last year, 2018, the last 3 years, the last 5 years, and since initiation in 1994.
What happens if we get into a bear market, for example? Does that hurt the performance of it?
That's a great question. This is a relative return product, so if the whole market goes down, then a PutWrite index will lose value as well. But historically, we've never seen a year where the Nasdaq 100 fell and the PutWrite index fell by more. So generally there's a buffer generated from selling those put options, and that mutes any losses. So again, there's never been there's never been a period of time, a year, when the Nasdaq 100 fell and the PutWrite fell even more.
All right, and on the same vein, let's get your outlook into the end of the year.
Listen, interest rates are low, but they're not as low as they were earlier this year. So if you look at the fact that earnings are pretty good, interest rates are still pretty low, then I'm pretty optimistic. Not as quite as optimistic as I would have been when interest rates were substantially lower, but things are not as bad as some people feared, and it now looks like a recession is not as likely as so many people were predicting.
Right, and you also have the seasonality trade in November and December as well. It'll be interesting to see if it plays out like that, considering the market's almost probably all-time highs as we speak now.
Absolutely, it is at all-time highs. I think that a repeat of last December, which was really ugly for equities, I think that's unlikely.
All right, thank you so much for joining us at MarketSite.
Thanks, Jill.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.